Malik, I'm going to start off with you. One of the issues that you have, you're the bear in this conversation, is the valuation of Palantir at about 150 times, according to our system. Is there any other big issue with this company and its narrative other than this really elevated valuation?
To be very honest with you, first of all, good morning. To be honest with you, as we think about Palantir's business, we really like it, right? Like it is one of the only AI pure plays out there. The company's business is great. The U.S. commercial side of the business is actually doing really well and is firing on all cylinders. So our sort of like issue with Palantir as a stock has been its valuation, and that's what we've highlighted over the last few quarters, that the valuation is getting out of hand. And especially if you think about, trying to bake in the assumptions that would take you to the current sort of stock price. Those are some very, very optimistic assumptions.
So, Derek, I want to come over to you. In previous years, Palantir was a bit of a black box. They did a lot of government work. It wasn't really clear what they did to a lot of people. Now they've expanded out to commercial work. So when we're talking about this valuation and just the potential TAM that they could have, with obviously a lot of U.S. and global companies looking to upgrade themselves with AI, do you believe the valuation is overstretched as well?
Well, thank you for having me. We at CoinShares see tremendous long-term potential for Palantir. While the current valuation is very optimistic, we believe Palantir could become the go-to operating system for enterprises in the AI age. We're talking about a potential $1 trillion market opportunity here, right? So now Palantir is a key holding in our CoinShares AI and Technology ETF, ticker AGIX. This ETF gives investors a balanced exposure of both AI infrastructure and AI deployment and applications. What's really exciting is how the AI deployment is really taking off in the enterprises world. Companies are seeing real benefits, better efficiency, happier customers, and this is creating a snowball effect for AI adoption. Palantir really stands out in this space. Their AI platform, particularly their ontology system, is a game changer. It brings together data, logic, and action in a way both humans and AI can actually work together. Plus, the AI platform has top-notch security features, which is crucial for companies to adopt AI safely. We're also bullish on Palantir's government business. The Trump administration is really prioritizing government efficiency and a digital transformation. This could be a start of a long-term trend, potentially brings billions of revenue for Palantir in the future.
All right, Malik, I want to come back over to you. I mean, valuation is about, forward-looking. You're expecting revenue growth and other things to kind of meet that valuation. Do you agree with what Derek had to say, that this company has a lot more upside than maybe we've even seen last year? Again, 340% gain. Because Derek seems to be saying they have a bit of a moat. They have proprietary software that other people can't seem to quite match.
Well, first of all, I completely agree with sort of Derek's point about them having competitive advantage. When we sort of look at our moat methodology, we do award Palantir an aeroeconomic moat. Now, as it relates to, as you said, valuations are forward-looking. I would again sort of like put that question back, is like, what do you need to believe about the top line or the margin profile for this business over a 5 to 10 year time period for you to get to a $70 or $80, as it was trading just a few days ago, dollars per share valuation. And I actually tried to conduct a reverse DCF, where you sort of like bake in what assumptions would get you to the stock price. And the numbers that I got would have put Palantir way ahead of essentially all the top software companies out there. You would have like a 10-year top line CAGR of around 30%. You would have a margin profile, GAAP operating margins of north of like 55%. So if that's the sort of assumptions that you have over a 10-year period, you could probably buy the stock at $80. But when we're looking at our own assumptions, again, they're very optimistic. They factor in a lot of the stuff that Derek has talked about, but we don't get there. We don't get to $70.